Okay guys, just finished a meeting with the guys in the squad and I'm just going to back it up. Now in it we broke down gold, which is here, and I was gutted because I was 90 pence short of the monthly target. So I thought, right, I'm going to trade this because I opened my mouth. What's the trade criteria? Well, we put in the set of figures, which are the fibs broken down from high time frames. As you can see, the price is running down here. It's pushing down heavily. Yes, it is stretched, so I'm going to look to pull this in just a moment. In fact, I'll probably be pulling it about now, actually. Let me just flick this back and then I'll explain what it is that I'm doing. Yeah, we're gonna close that out. All right, so I've shut that out now. It was only 30p. I've shut it out because it's incredibly stretched and it's stalling, and the chances are it's going to pull back up, which it is. Doesn't mean to say that I can't re-enter the market and come down. But one of the things we were discussing inside of that was don't be a hero. If the trade isn't there, don't go for it. Now I'm just going to mark this into my journal. So let me just get that up. So just switch that on. Okay, so that is 611, and as we can see, it's pulling back. So I was right to kill it off. So I just need to copy that because that was the bit that I did this morning. We were at 30p, 611. This was done on gold, and it was using Kylie fibs, and it was short, and we were looking for the break of 15 min structure point. Okay, so what's this mean? Well, we set our target out at 15% for the month. The reason it was down at 15% is, yes, it is ambitious, but it's a small account, so it's naturally over leveraged to start with. What that means is your percentage is going to be bigger than sort of if you're on a high account, you know, sort of 10,000 plus. But it was realistic in the sense that I only wanted 46 quid. We have now achieved that target, and we are 12th of November. Now, bear in mind, I was away with the Scruffy Squad for the beginning of this month. I did a little bit while I was out there, but not a lot, which is why the dates are quite sporadic. But we've achieved what we set out. I just need to coast along now, and I'm quite happy. This is starting to edge up. It's nearly at 40p, which means I can get that up, and that means my bigger position size again gives me more money, and I've got a profit split at 25 quid. That'll then get put in the wallet, and every time that wallet hits 100 quid, I'm going to put it into the emerging markets. Now, if you're unaware of what the emerging markets are, bear with me. I'll just log on and I'll show you. Okay guys, so this is the Vanguard. I'll do an update of this at the end of the month. But essentially it's currently sitting at 97,000. I'm desperate to get it to 100,000. I was hoping to do it before the end of the year, but might be sometime in the beginning of next year, but that's not to worry. But what I'm looking at is this section here that I've set up for the small accounts, the emerging markets accumulation. What that means is all these little funds that I have, I'm just going to dump in there. I'm running one with sort of my web trader, and the BlackBull is now going to go into there. It's currently sitting at 150 pounds. Its growth is minimal, but we've only just started it. So that's something to keep an eye on. As you're going through this journey, watch how big that grows, and that'll tell you how much small account investments is making for me. Now, if we run through it, that's the spot gold that we're looking at this morning. This is the actual chart that we worked on, and as you can see, there's the expansion point pushing down, which is one of the reasons I was taking the trade. But if I pull this back to BlackBull, which is here, there we are. I was right to take the money out of that. Now this is surging down again on the 5 minutes. Let's have a quick look, see what the situation is. There's probably another thump at this, so let's just drop another order in there. And if we just pull it down onto that, it doesn't have to go far to get through this, because we've actually got the criteria of motion in place, and it's going to be looking for this. Okay, now the criteria of the trade earlier on was the break of that point, this bit here. So it pushed up, come down, broke through, and then we got our money. Now if I take this down into 5 minutes, I'll be able to show you what we're looking at again. Now this time, again, we still believe we're getting down there. It's pushed up, got about halfway into this candle, and then showing signs it's going to come down, which it is. We've got 870, so let's see if we can round this off to a straight tenor. So we only really need for it to revisit the bases of these candles again, and the job will be done. Very, very simple. And I'm only putting this on to show you that it is feasible. So let's play this one out. Hopefully it shouldn't take long, to be honest. Come on, down you go. Just a little click. We're looking for, well, we're not looking for much, are we? £1.30. So that might happen relatively quickly with this 9 o'clock surge candle. So let's just push that out to the hourly. Are we still in play? Yeah, it's still pushing down. High feasibility to get there. All right, I'm just going to let it play out. Let it go little boy's room. Down it's coming. Well, it's going. Oh, it was almost positive. Not to worry. So just drop that down there. Just let it push down to the base. Might get a quick slam out of it and I can just click it off. But we'll play it out and then we'll see how we get on from there. Okay. Okay guys, going to kill this off. Kabush. There we go. Why? Because I wanted to break 10 quid. Done that. 2.29 the pot. Could push down further, but it is starting to get a bit stretched. And if we look at this, it's pushing back, but the general movement is up, so it'll come down, bounce, and then go back up again. If I want to re-enter, I'll be re-entering back up here. It's the age-old thing, sell high, buy low sort of thing. Right, so let's add that in the sheet. So again, it's the exact same criteria I was using before, so I just need to put that off. Now I have been asked about where this sheet is available, etc. There is a link down below into the Scruffy Squad, Coffee Pot and Beyond, all get it. Yeah, that's correct. But let me just quickly show you what it's all about. This controls pretty much what I do. I put my targets in. It tells me where my sort of focus is. So I'm looking for 46 quid. So that's for the month, which equals 1062 per week. Now I've done that today, or 212 a day would give me this, and that's 15% growth in 1 month. There's not a bank in the land would ever give you that on that. So this balance has grown quite a bit this month. We're up 17%. Now if I was to show you the summary, what we can see, the growth from the start of this is 130%. The gross that I've had out of it is 461, but I've been taking money out, and that's what that emerging markets was. You'll have seen there was about 100 quid from the start. It's there because I took it out, it hit 100 quid, withdrew it out of the wallet, dropped it into that emerging market, and then we carry on. Now my goal is once I hit 400 quid at the end of the month, so I need to hold that above 400 quid, I'm going to change that MT5 account from 500 to 1 leverage down to maybe a 400 or a 300 leverage, because I want to reduce the... Right, let me just kind of explain that. High leverage is wonderful for opening positions, but it's also very dangerous because it gives you the temptation to put too big a position size on, which is why I have inside of my sheet these things here. Tells me how big my position size should be. The leverage will only allow me to open up, say, the DAX, which is very expensive, but I will control my position size. But if I was going mental and I've got lots of leverage, well, I might put 3 or 4 quid on. And I have done it in the past where I've actually put a £3 position on instead of a 30p position. But if my leverage was reduced, it wouldn't allow me to do it. And that's why I'm going to do it. Sometimes it's just schoolboy errors and you learn from your mistakes. That's something I'll touch on at the end of the month when I do the update on the other account, because I royally got kicked in the balls by doing a schoolboy error. But at the moment, 93% hit rate. I've only taken 15 positions, so it's not exactly singing home about anything. But if we go on this side, we'll see what my win rates actually are. It's here. So 85, 91 and 93, and collectively it's 1973 pips made over the last couple of months. Now, as this account grows, if I maintain this, that will naturally explode. Hope that helps. Anyway, I just did it because I was talking with the guys this morning, and as always, if I analyze something and I break it down, I'll back it up, and I'll back it up in real time, and I'll back it up with my own money, and I can't be any fairer than that. So if you like it, do subscribe, comment. Always happy to speak to you, and if you reach out, I answer every single one of you. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.